Good day, welcome to today's class. If this is your first time on this channel, please click the red subscription button to get notified or to get more notification of videos when we drop one, and you don't want to miss our content. Trust me, they are mind blowing. So for the sake of this class, we will continue with our lecture on capital gain tax, but today in this class we'll be doing capital gain tax on hire purchase. Yeah, what do you mean by hire purchase? Hire purchase, I'm not going to dwell more on that. Hire purchase is just when you buy an asset. You can't pay everything at once, but you have to pay it small. So you now have to pay additional interest. Yeah, and there's still a concept you need to understand. I explained that concept in my previous video, which is capital gain tax on connected person. I explained the concept of fair value. So please, if you have not checked out that video, I will drop the link under this. And it is this concept of fair value I'm going to explain how you are going to calculate capital gain tax on hire purchase. Now let's play a good illustration. Let's say you want to buy an asset, and the asset costs, the market value for that asset is 1 million naira. Now market value of the asset is 1 million, but because you are paying it small, you cannot pay everything at once. Maybe you pay at first, you pay 250,000, then you now pay the rest for some months. You are not paying it at once. Then the seller of this asset might decide that, okay, because you're not paying it at once, you will pay total amount of 1.5 million. Now, I said it in my last class that in taxation, in accounting generally, we are so much fantasized, we are so much concerned about the market value. Note, this 1.5 million is not the market value. Now, if you are doing your calculation, you say your sales proceed, right? The amount is here, your sales proceed. Now you now have, let's forget selling expenses now, let's leave it aside. You say less costs of acquisition. Now the question is, in my cost of acquisition, should I use this motor van because the market value is 1 million, but because I'm paying instrumentally, I want to pay 1.5. Now listen, anytime you're having issues with something like this, always go for the market value, which is 1 million naira. So your cost of acquisition does not include the interest you are paying. Yes, and I will show you why. Let's say, for example, now with this same illustration, you are selling this same asset that you bought for 1.5 million naira. You are selling it 2 million naira. Let's say, for example, just for illustration, so you get why we need to consider the market value and not the hire purchase amount. Now the cost of acquisition, let me use 1 million, and at the same time I will use 1.5. You now see the effect it will have on the tax you are going to be paying. Now let's say I use 1 million. Now my capital gain is 2 million minus 1 million, which is 1 million. Then my capital gain tax will simply be CGT at 10% will be 100,000, because that is the 10% of 1 million. Now let's now assume for this same illustration, I'm not more using the market value. I want to use the hire purchase value, which is 1.5 million naira. So I'm going to have my sales proceed of 2 million naira, still of 2 million naira, 2 million naira, and my cost of acquisition which is 1.5 million naira, or 1,500,000. Now I'm going to be having a capital gain of 500,000. And in the end, if I'm to calculate my capital gain tax, 10%, that will be 10% of 500,000. 10% of 500. So 10% of the 500,000 is 50,000. So yeah, if you consider the market value, your tax liability should be 100,000. But if you consider the hire purchase value, your tax liability will be 50,000. So you see, and we don't have anything to do with the hire purchase. Whether you reduce the price or you increase the price, we don't care. All we know is that we want to use the market value. So That should tell you that whenever you are dealing with capital gain tax that has to do with hire purchase, please, if you want to get the cost of acquisition, always subtract the interest that you have paid. Yes, for example, now I have 1 million naira here. I did not include the interest. So the right one or the correct one is the calculation that you did not involve the higher purchase value or the interest. The interest on this transaction now is 500,000 because the seller charged extra 500,000 because I'm paying instrumentally. So you are not going to charge the interest. So when dealing with higher purchase with capital gain tax with higher purchase, you subtract or you don't include the interest in the costs of the assets. Now enough of that, let's take a question so that we can see how we can navigate and maneuver our ways and solve questions like that. Let's see. Now from the question we have here, we have Union Company Limited purchased a chargeable asset on hire purchase. The deposit paid for the purchase was 250,000. Good. The balance of the purchase price was to be paid in 36 monthly installments of 25,000. Now the cash price of the asset is 790,000 naira. Calculate the capital gain tax due assuming the assets were sold as follows. A, for 1.3 million after full payment of all installments. B, for 1.25 million after payment of 24 installments. Now from this question, we are given we are asked two questions. The first one is, if the asset was sold for 1.3 million naira and he has completed all his payment, and if it was sold for 1.250 million naira and he has only paid 24 installments. So now let's take this question. I'm going to break it down so that you are going to understand it perfectly. Now the name of the company involved is Union Company Limited. Union Company Limited. Now computation of the capital gain tax, you can involve that computation of the capital gain tax. Now if you look at this question, let's start with the first one, which is sales proceed. Our sales proceed here for the first instance, sales proceed is 1,300,000. 1,300,000. But for this assumption of 1,300,000 for the sales proceed, we are assuming that he has made all his full payment, so he has completed the payment. But let's do something very small. Let's do a kind of mini calculation before we proceed. Now what is this deposit? From the question, we're told that the deposit paid for the purchase was 250,000. So he has made a deposit of 250,000. Deposit, I just want to do a very small deposit of I'll do it here. Deposit, this is just a rough calculation. No, this is the main working. Deposit of 250,000, and he's going to pay 25,000 naira monthly for 36 for 36 months. He's going to pay 25,000 naira. So 36 months times 25,000 naira. So that will give us the total amount of money he paid instrumentally. So what I want to calculate here is the total amount of money this particular person is paying. We have been told in the question that the market value, the cash price of the asset is 790,000. That means the market value is 790,000. But that is not the amount of money this company is paying for the assets. I want to calculate the amount of money they are paying. And how am I going to estimate that? The deposits they made and the amount of their installments times how many times they paid it. So if I take my calculator now, 36 times 25,000, that is 900,000. That gives me 900,000. So the total amount of money this company paid is 900,000 plus 250,000, and that means 1,150,000. is the actual amount of money being paid for this asset. The money being paid for this asset is 1,150,000. Now let's do another rough calculation. I'll take you step by step so you get it. Let's leave this one like this. This one is just to get the higher purchase value. That means the amount they are selling it because he's buying it on higher purchase. So now let's go back to the market value of the asset. The market value of the asset is 790,000 naira. So the market value is 790,000 naira, and he made a deposit of how much? He made a deposit of 250,000 naira. So 790 minus 250, 790 minus 250 is 540,000. So 540,000. So the question is, the ideology behind this is that this man is not paying instrumentally. After paying 250,000, the amount left for him to pay is 500,000. I believe you understand this. If you don't understand this, please take it back a little so you get better understanding. And if you don't understand this too, take it back a little so you will watch it very well and you understand it better. Now, he paid the market value or the cash price is 790,000 naira, and he made a deposit of 250,000 naira. He is not paying it instrumentally, he's not doing higher purchase, his balance should be 540,000. Now, and they said from the question that he's going to pay in how many months? 36 months. 36 months, right? Now, what I'm going to do is that I want to get, don't forget that the amount is going to be paying every month is 25,000, right? It is already here, 25,000. But what I want to get is, if this is the amount he's going to pay, the real amount he has to pay without installments, this is the real amount. Now divide this amount by that 36 months. Let's see the real amount he will be paying every month to be able to cover the costs. That is what I'm doing now. If he's meant to pay 540,000 naira for 36 months, how much is he going to pay without any interest? That is what I want to get now. So divide this 540,000 naira divided by 36, and if I take my calculator here, 540,000 naira, 40,000 naira divided by 36, definitely you should be paying 15,000 naira monthly. So if you take your calculator, 540,000 divided by 36, you should be paying 15,000 naira monthly without any interest. But they said he should be paying how much? 25,000 naira monthly. So the question is, what is the interest they added? They added 10,000 every month. The ideology behind this calculation and this calculation is to get the interest that they added for him to be paying on each month. So what I need to do is to the market value less the deposit. So get the real amount is meant to pay without any interest, then divide it by the number of time he has been given, so that you get the real amount he will pay to be able to cover the real cost of the asset. So the amount is 15,000 naira to be able to cover the real cost of the asset, but he was told to pay 25,000 naira. So what does that mean? To get the interest, the interest is paying per month is 25,000 naira minus 15,000 naira, and that is 10,000 naira. So that means that on every installment this Union Company Limited is making every month of 25,000, they are paying 10,000 naira interest. I've estimated their interest. That is what I need, so that I estimate this interest, so that when I'm calculating the cost, I'll be able to subtract the interest. Remember, I told you that when estimating the cost of the assets, the interest is to be subtracted. What I needed is the market value. Now let's proceed. So now I've already noted the interest here. The interest is paying every month on the 25,000 naira is 10,000 naira. So let's less the cost of acquisition. So the cost of acquisition include the deposit he has paid. How much is the deposit he has? Because that is the amount he spent. Deposit he has paid. He has spent, from the question they said Deposit paid for the purchase was 250,000. So deposit of 250,000. And don't forget that for the option A, they said for 1.3 million after full payment has been made. So they are telling us that if you want to solve for the sales proceed of 1.3 million, the full payment has been made. That means he has paid for 36 months complete. So now installment paid. So far he has covered the 36 months installment paid. So far he has covered the 36 months. That will be 36 months times 25,000. I hope we get that, because he has paid already. He has paid for 36 months, 25,000. So if I take my calculator and say 36 times 25,000, that will give me 900. So he has paid extra 900,000. So by my calculator, 900,000 plus 900,000 plus 250,000, that is 1,150,000. 1,150,000. This is the amount this man paid. But is this the market value? No. What we need is the market value. That is the cost of the asset. We don't need all this. It's because you are buying it installments. That's why you are paying excess money. So we need the market value. How do we get the market value now? We need to subtract the interest this man has paid. And don't forget that he paid for 36 months. And how much is the interest he's paying every month? We've estimated it earlier. It is 10,000 naira. So subtract less the interest from this, it will give you the cost. So interest of 36 months times 10,000 naira that is paying every month. So I hope we get that. 36 times 10,000 naira is paying, it will give us a total of 360,000. So that means that for the 36 months he has paid a total of 360,000 interest. So by my calculator here, if I say 1,150,000 minus 360, that will give me 790,000 naira. That will give me 790. Now if you go back to the question, this minus the interest he has paid, that gave me 790,000. If you go back to the question, the real, because this 790,000 naira I got is the market value. And if you go back to the question, they said the market value or the cash price of the asset is 790,000 naira. So you can see I'm very correct. Now I will now explain why you need to do all the calculation we did earlier. I will explain why you need to do it in that second option of the answer. Just follow the class. Now, so for me to get my net sales proceed, I'll just say 1,300,000 minus 790. 1,300,000 minus my 790, that was 510,000 naira. 510,000, and this is my net sales proceed. This is my net sales proceed. So sorry, if this is my net sales proceed, what is the next thing I need to do? The next thing I need to do is to subtract my is to get my capital gain tax. Exactly. So I've gotten my net sales proceed, and there is no other expenses that we have been told in the question or anything. No other expenses. This is just it. So the next thing I'm going to do is to calculate my capital gain tax. So capital gain tax at 10% of my 510,000, and that is 51,000. That is my capital gain tax. So now let's move to the second requirement of the question that says for 1.25 million after payment of 24 installments. Let's take that one together also. Now for the second requirement of the question, it's telling us that now we did not, this man or this company have not complete the 36 months. Yes. So and they are selling the asset for 1.25 million naira. We should calculate the necessary things. So we proceed. Our sales proceed as given from the question. Sales proceed is from the question is 1,250,000. Yes, sales proceed is 1,250,000. So, and they told us that he's meant to pay the installment for 36 months, but he has only paid for 24 months according to the second requirement. He has only paid for 24 months. So we will go less the cost, which is the deposit of the asset. The deposit he paid. Deposit he paid from the question is 250,000, and for 24 good months, how much did this man paid? So for 24 months, installment paid. We're told that he's going to pay 25,000 naira for 36 months. So he has only paid 25,000 naira for 24 months. So 24 months times the 25,000 naira he has been paying. 24 months times the 25,000 naira. So by my calculator here, if I go by 24 times 25,000 naira, that'll give me 600,000 naira. 600,000 naira. Now 600,000 plus 750 plus 250 rather, that will be 850,000 naira. But this calculation we've done includes the interest that is charged. Yes, includes the interest. So I need to subtract the interest because this is not the real cost of the assets. I need to subtract the interest for that 24 months. And don't forget that I've already estimated. That is why I said you need to estimate the interest that's being charged every month. And I've done that before. I said it's 10,000 naira per 25,000 naira the man is paying every month. So less the interest is paying, which is for 24 months, he has paid interest for, he has paid the money for 24 months. So 24 times how much is he paying? 10,000 naira interest on each 25,000 naira is paying. So by my calculator, 24 times 10,000 naira, that'll give me 240,000. 240,000. So I will subtract that from my interest, which is 850,000. That'll give me 610,000 as the real cost of the assets without including the interest. So from there, I will subtract it so I can get my net sales proceeds. Subtract 1,250,000 from, so that will give me 640,000 as my 640,000 as my capital gain. Yes, so my capital gain is 640,000, and the computation of capital gain tax from this point is very easy. So capital CGT at 10% of 640,000, which should give me 64,000 as my final answer. So we've come to the end of this class on how to calculate, how to estimate capital gain tax on hire purchase. That's not all. We are still going to have partial disposal, yes, and some other subtopics under capital gain tax which you don't want to miss. Please click the red subscription button so that when we drop next video, you'll be able to get notified. If you have any misunderstanding, please take it back. You are free. Yeah, you are good. Take it back and watch it again. Thank you. See you in my next video class.